People are still eating a lot of Twinkies and donuts during the pandemic. Judging by the results at a Hostess Brands this week, fourth quarter sales rose 18.1%, while net income popped 25.9%. Hostess Brands CEO Andy Callahan joins us now. Andy, always good to speak with you here. What are the buying patterns you're seeing from consumers right now?
Hey, Brian, thanks for having me again. Consumers are coming back to tried and true brands. We saw snacking trends very positive prior to the pandemic, and that's nothing but continued to accelerate it. Consumers are getting accustomed to sharing moments, in-home usage, snacking, and indulgent snacking. We continue to see that. We see it with younger consumers as well. One of the exciting parts of our business right now is we're well positioned to continue the snacking trend of which we are. We're a snacking company, and we compete in areas where consumers are snacking. They're snacking in-home, so our multi-pack is good. Our impulse sales are positioned to grow. We've been growing our share within the convenience, and when consumers come back to the convenience and impulse sales as they get more mobile, we're positioned to grow there. And our recent Vortman acquisition, where we have a leading share in free and are launching super grained in the more wholesome area, they're all trends that are positive, and they're all consumer trends that were positive before the pandemic, and we expect to be higher and continue outside of the pandemic.
Andy, this is Emily. I wanted to ask about your biggest customer, Walmart, because I was taking a look at your 10K and saw that Walmart actually decreased about 3 percentage points when it comes to revenue share from 2019. And I'm wondering if that was because of decreased purchases from Walmart or increased share from some of your other customers.
So if you look at the last 4 weeks data, in total, Hostess is growing at 11% versus our category 6%. We view our frame of reference much broader than that. I don't comment on specific customers in total, but what we're seeing is an adjustment on supply chains as we adjust to a new normal. That is happening across all of our consumers. It's not consumer driven. It's adjusting our supply chain. Our sales have never been stronger overall. One of our primary values is to serve our consumers and customers. We're going to continue to do that, and I expect to see positive sales results coming across every channel. It's one of the strengths of our businesses is the diversity of our channel distribution. We're equally strong across dollar segment, convenience segment, food segment, convenience channels, as I mentioned, and that will continue across every channel. There's just a magnitude of supply chain adjustments coming out of the pandemic are different depending on the channel.
And Andy, let's talk about pricing, because we've been talking to a lot of food folks about what's going to happen with pricing this year. Do you guys expect to raise prices?
We do. We expect to see, and we've done this before. We have detailed data related to our elasticities and by channel and by pack type. And we're looking at that right now. We expect that to impact more in the back half as we flow through. We're seeing total about 2.5 to 3.5% inflation, and based on our multifaceted approach of productivity, managing mix, being efficient with our revenue management approach, we expect to be able to manage through that and cover that as we move into the back half of the year, and that includes elements of pricing as well.
Andy, where are you seeing that inflation?
Well, we see it across the market basket, but it impacts us in the short term in different ways. Our procurement team is very good with covering commodities and looking forward and making sure that we're well in a position to have a predictable input cost. The other places we're seeing it mostly in the short term is in the transportation and fuel, and slightly within corrugate as well. So those are the areas that are impacting us in the short term, and we're, for the most part, covered as we look through the end of 21 on our commodity basket.
You talked a good bit about, on the earnings call, expanding the Hostess brand. Where are you launching new products this year? Where else could Hostess play?
Our new product slate has never been stronger. So where we, as I mentioned earlier, Brian, we're in indulgent snacking, but we're also have items and products that meet the morning occasion, They meet the afternoon, what we call AM snacking, where we grew 13%. Our donuts business is one of our largest sub-brands, was growing more than double digits. Our new product slate moves the Hostess brand into occasions that consumers previously may or may not used us. So, for example, our crispy minis are moving into a more of a shareable occasion versus an individual occasion, which we expect to have a high index more in the evening time frame. We're also moving our Voortman brand, which is just doing extremely well. The acquisition of Voortman and the integration that the team executed exceeded all of our revenue and profit expectations in 20, delivering nearly $28 million of EBITDA. We're moving that into wholesome snacking and also accelerating it with new items in the sugar-free, where Voortman is the #1 brand. And if you haven't tried Voortman, you should try it. It is will exceed your expectations on taste. So we're moving into new need states and occasions with the Hostess brand, while continuing to fuel the icons of which we're that are so loved by consumers.
Speaking of icons, Andy, we have a whole office full of Twinkie fans. Did Twinkie sales grow? Have they grown during the pandemic?
Yeah, Twinkies continue to grow. They are growing during the pandemic, but Twinkies also has a really high immediate consumption share. So like a lot of our products, depending on the form, so the individual consumption, like I'm buying it right away, is slightly down, but our multi-pack consumption continues to be up. And so eating at home, putting in a lunchbox, and sharing those occasions is good. Now, this is great news for our Hostess business going forward, because as consumers get more mobile, that element of our business has continued to grow. And the trial that we had of eating at home is going to stay. We're not as dependent as with restaurants opening up and consumers eating out, because we're a snacking occasion, which is traditionally more at home. And that's true of our limited time offers as well. We've always had a Halloween celebration party, not trick-or-treating, but parties at home. And that accelerated this year. We're seeing our Valentine's LTOs with our heart-shaped ding-dongs and cupcakes up 25% this year in the first quarter. So things are going very well for Hostess.
Well, hopefully, Andy, we will actually get to talk to you in person. You know, we've been talking throughout the pandemic, but it's all been digital. Hope to see you soon. Hostess brand CEO Andy Callahan, stay safe, and we'll talk to you soon.
Thanks, Brian. Thanks for having me.